Hello and welcome to Accounting Tutorials. Today I'm going to be continuing with the September 2023 paper, and this is part 3. I've done 2 other parts to this paper, so if you haven't seen them, please go back and have a look. So today's paper is essentially going to be looking at the statement of financial position. I did notice some of you did ask me to look at this question, and yeah, I want to thank you guys for your support, and I hope this video does add some value to you. And for those who would like to reach out directly, I'll put my email in the description. And lastly, just to wish all the matriculants writing good luck. I think accounting is coming up soon, so all the best with the paper. Just remember to get your preparation in order, exam technique in order, and you should be fine. So stay calm and answer the question as you understand it. All right, so let's proceed with this paper here. So as mentioned, we're looking at question 1, so retained income and statement of financial position. So this is Tsatsi Limited. So the question that we'll be looking at today is question 1.4. And the requirement is to complete the statement of financial position, so the balance sheet, on 30th of June 2023. Where notes are not required, workings must be shown. All right. So 1.4. Statement of financial position. And we need to just indicate that this is as at 30th of June 2023. All right. Okay, so because I know I'm doing a balance sheet, I can already start setting up the structure, right? So I now have assets, non-current assets. I'll just leave some space. Current assets. And then I will have my total assets. Okay. And then equity. And non-current liabilities. And then lastly, my current assets. Okay. Right. So that's just the structure that I can start off with. All right, so let's see what we can already start populating. So let's just indicate here. So this is all rands that I'll be putting in here. All right, so we know we have this additional information. And yeah, by the way, so this is a continuation of everything we've done. So the 1.1, 1.2, 1.3. So we'll have to leverage off our calculations from those questions and pull them through into our question here. All right. So we already have balances that have been provided here. So what we can do is start populating what we've been given. So we've got ordinary share capital, right? It's 1,755,000. Okay, so that's already there. Okay, and then I'm just going to double check this number. So remember, we actually did work out what the share capital should be. And that was that would have been part of question 1.3. Okay, and 1.3, so we were told, if I just go back down to the requirements here, just to refresh. So you were told that there was a share repurchase at 150 per share, which would have resulted in a reduction in your share capital. And we did mention this would be the journal that the entity would have to process, but we're already given what the closing balance in share capital was. So effectively, this doesn't really affect the amounts that have been provided. All right, So I can then go back to my question and say, all right, so this number is correct. So I'll just mark it in green so that I know I've checked that number there. All right, and then you have retained income and retained income. So that's 1,045,000. Okay, so let me just do this here quickly. Okay, so retained income has been also provided. And just to remind ourselves that this number was actually the closing balance. Okay, so the 1,045,000 was the closing balance. So we don't need to do anything there. We already have the figure, so we can populate that. Okay, and then there is a loan from Shiloh Bank. We've mentioned this is a loan payable, so that'll need to be part of my liabilities. And they've given us the amount. So we have 609,840. Okay, so this number I'm not certain of at this point, so I'll just put it in yellow for me to double check. And I'll also just copy this in to my, oops, sorry, this should be current liabilities. All right, there we go. I'll just copy this into my current liabilities as well. And if I don't need to use this one, I can always just delete it. If you do have it in your exam paper, you can just put 0 if there hasn't been a split between current and non-current. Okay, and also the reason why I'm populating or pre-populating my balance sheet with what's been given is also just to make sure I don't miss anything in my balance sheet. All right, so there's also fixed assets at carrying value. So that wasn't given. We had to calculate that. So fixed assets, right? And we did work out in question 1.2, we did work out the missing figures in fixed or tangible asset note. So we can go back to that. So it was basically these two amounts added together. Okay, so I'm just going to add what I have in 1.2. Okay, and all right, so that's fine. So that's just the fixed assets there, right? And then there is a fixed deposit. And I'll just put that under non-current assets. And we know the amount, so that's also been given. So 582,000. Okay, so unless if there is anything else stated here, so which portion is current and non-current, we'll do the split. But at this point in time, we'll just put the balances as provided. And there is inventory. Okay, and the inventory balance is not given. But remember, we did calculate the closing balance as part of question 1.1. So I can just link that amount there. Okay, so let's just do the linking. All right, so it was 898,800. That was the closing balance of inventory that we calculated. And then next, so we've been provided with net trade debtors. All right, so net also gets me a little bit worried because that means something else has been deducted of that amount. But all right, for now, we'll just take it as is. So that is 209,100. Okay, so that's net trade debtors. So as indicated, so the numbers that I don't know, I'll just mark them as yellow until I can confirm that there's no additional information relating to that balance that I need to take into account. Okay, and then there is a bank balance. So we told it's favorable, which means it will be part of your current assets. And maybe I should have also started by clarifying the split. So remember, your balance sheet requires you to split. So the presentation, so you have both presentations where you can split current and non-current liabilities, or you can basically put it in the form of liquidity basis. So effectively, we are taking this split, and I think this is the one that's taught at metric level. So not just to confuse anyone. So if you haven't heard of liquidity basis for your balance sheet, you can just ignore what I've said. But we'll just go with this presentation. So your current assets are those assets that you would settle within the next 12 months after year end. So that means, before 30th of June 2024, you expect to realize these assets. And non-current assets would be everything else that is over 12 months. And the same split for liabilities. So current liabilities are those you're going to settle within the next 12 months. And then non-current is basically longer than just 12 months. All right. So let's continue. So we were at the bank, and bank wasn't provided, just that it's a favorable balance. I'm just going to put this as yellow, so the amount is missing. All right, and then we have deposits, water, and electricity. So I'm just going to add that as part of my current assets. Okay, so just update. Okay, water and electricity. All right. Now, so these balances, so you could, include everything in your trade debtors if you want, or you can show it separately. I think it's completely up to you. All right. Next will be, so they've given us the SARS income tax provisional payments. All right, so these are effectively your payments that you've made towards your tax. And I think it's, the first and second provisional tax payment included, because usually an entity will make the third payment after year end. So after they've received, the assessment from SARS to know how much is still owing. So there's nothing at this point we can do with that provisional tax payment. So we're just going to have to park it for now. And, we'll essentially come back to it. All right. So the next is trade creditors. So that forms part of my current liabilities. Oops. Right. So there we go. Okay. So the amount that's been provided there, right, 763,860. Okay, and then they provided us with shareholders for dividends. So if you remember, this is part of the question that we looked at, question 1.4, where they mentioned that there was a dividend that was declared, and the amount that was declared. So that's the amount that you could take as outstanding, because you've been given, as of 30th of June, this is the shareholders for dividends. All right, so then I'll just include that as part of my current liabilities, and that's because there is a requirement to settle your dividends within a certain time frame, which is shorter than 12 months. So ideally, then this will form part of my current liabilities. All right, so the amount 260, and I don't need to do anything there because remember we've checked this as part of question 1.3. So I'm happy that that is the final amount. Okay, and then the trade creditors, so this I'll put in yellow for now. Okay, and then we've got rent expense and director's fees. So nothing else that is balance sheet related at this point in time. All right, so then let's go through the additional information. Okay, so this is basically relating to the inventory. So this we've covered, one we've covered, and two is the fixed assets, fixed or tangible assets, which we've looked at. Okay, but there was actually a something important that they've mentioned here. So under point 3, land and buildings. So they've told us that the company also owns property. Okay, so that means they've got land and building that they own. And nothing else further was mentioned about this. So what I'll do is I'll just go back here and just include land and buildings. Okay, let's put a question mark. Right, so next, equipment. So this we have covered in calculating this closing balance here. So I'm happy with everything under vehicles. I don't need to look further into that. All right, and then, right, so number 4. So we've been told here that a creditor's credit balance of 1,500 in the creditor's ledger must still be transferred to his account in the debtor's ledger. Okay, so that is, a mouthful, but, essentially, if you remember how a creditor's ledger works is if you buy something from a creditor, you credit the creditor's ledger, so you increase the amount that you're owing to your creditor, and if you pay, you debit the creditor's ledger, so that will be a debit balance. So essentially what they're telling you here is you have a creditor that's also a debtor, right? For that same amount, so the 1.5 that's been given. So effectively, you need to transfer out of your creditor's ledger this amount and reduce the amount that the of your debtor, so the debtor's ledger, with the same amount. So this transfer essentially would then go out of your trade creditors and then reduce your trade debtors with the same amount, so your net trade debtors. Okay, so let's just do that transfer quickly because we have the information. So just remember to show your workings so that the marker understands how you got to the amounts, okay? Right, so then I'm just going to take out 1.5, right? And the same amount would then come through as a transfer out of my debtors. Okay, so that addresses that point. All right, and then next, so a storeroom was rented out from 1st of October 2022 at 11,200 per month. Rent increased by 7.5% per month on 1 April 2023. Provide the outstanding rent. Okay, so we need to work out how much of the rent hasn't yet been provided for. Okay, and remember from the table above here, they've given us the rent expense. So that's telling me this is actually not the full expense. So there is amount still outstanding that I need to account for. All right. So I then need to include this somewhere. So what I'll do is I'll just add my notes at the bottom. I'll just call this note 1 rent expense. Okay. And we know the storeroom was rented out from 1 October up until year end, right? So 1 October to 30th of June. Okay, so this would then make it 9 months. Okay, and then rental per month. So that's been given. So that's 11,200. Okay, and then from 1 October up until the 1st of April. So that'll be 6 months, right? So then I need to work out 6 months of rent before the escalation happened. Okay. All right, so I'll just say rental prior to increase. Okay, so this will be as indicated 6 months. Okay, so that is my total rent up until end of March. All right. And then my increase is 7.5. There we go. Okay, all right. So I have my rent, so I can calculate the new rental per month. So I'm going to take the 11,200. Okay, and then I'm going to add on to that 7.5%. Okay, and then that's then my new rental per month. And then from April up until 30th of June, and that will then be the remaining 3 months. Okay, I'll just say remaining rental. Okay, times 3. Okay, so that's my rental. Total rent expense is then the 67,200 and the 36,120. All right, so that becomes my total rent expense. Then rental given. So I've been provided with, if I scroll up to the table here, so 91,280. Okay, so which means what is outstanding is the difference between the two, right? So what I should have paid versus what's sitting on my balance sheet. So that means rent for 1 month is essentially outstanding, right? Because that's the new rental that we calculated. Okay. So I then need to go back to my balance sheet and the trade creditors and say, all right, so here I then need to add on my rent for the 1 month that's outstanding. Okay. So then that's now added there. Okay. So happy with that so far. So we've then dealt with the storeroom, and then we're going to move on to the loan from Shilo Bank. Okay, the loan statement from Shilo Bank revealed the following. All right, so remember, the loan statement is essentially what you would get from the bank, right? So you've borrowed money from the bank, and either end of the month or at the end of the year, you can request a statement from the bank, and they'll provide you with the statement showing effectively how much you are owing, how much you've paid, and what is the interest that they've capitalized on the loan. So that's effectively what they provided us here. So we know that from the loan statements, we have total repayments, including interest, of 225,400. Okay, and then we've got interest capitalized of 83,160, and then the balance at the end is not provided. So now that tells me if I go back to my balance sheet here, so this balance that I have is actually not the final amount. Okay, so it's not correct. There's still some calculations that still needs to happen there. All right, and then we told that 20% of the loan will be settled during the next financial year. So remember, that now tells you that 20% of whatever balance we work out is going to be settled within 12 months. So it should be disclosed as current liabilities. All right. So let's then add this as a note. Okay, so I'll just add this as N2. Right, so loan from Shilo Bank. All right, so then I'll start with amount given, and that is 609,840. Okay, now repayments. So let's think about this. So Tsatsi Limited has borrowed this money, and in their balance sheet, they're basically reflecting the loan at 609,840, right? Now, that tells me that obviously they would know how much they've paid. Otherwise, how would they have recorded the entry for the repayments? And nothing else has been stated on this except we just received the statement, right? So in my mind, the only thing we need to actually account for at this point in time is the interest. And if you think about it, the reason for that is usually the bank would know how much interest needs to be capitalized to the loan, right? Especially if your loan is a loan that's linked to, for example, a prime interest rate, which would vary, maybe on a quarterly basis. So, as a simple business, you wouldn't be, tracking the prime interest rate to, tie it back to your bank. Um, some entities obviously do it because they've got the resources to do that. But at this point in time, because I need to calculate the closing balance, it tells me that the only thing they haven't taken into account is the interest. Because as mentioned, they would have known how much they've paid. And to record this 225, your journal entry, if you think about it, you would debit the loan to reduce the loan and you would credit bank because you've paid it. So I'm comfortable this 225 has went through, but the only thing I still need to now look at is the interest and add the interest. Okay, I hope that makes sense. So let's do that. Okay, so interest capitalized. Right, so that'll be 83,160. Okay, just update that again. So 83,160. Okay, so which gets me to a total balance. I just need to add the two together. Okay, so 693,000 is then my closing balance. Okay. Now, remember, 20% of this is current, right? So current portion would then be the closing balance times 20%. So that is the current portion. Non-current would then be the difference. So the total minus what is current. All right, so then I need to just go back and update my amount. Okay, so I still need to link current, non-current. Let's start with that one. And I'll just change it because I've checked this number, so I'm happy with it. And my current portion would then be the 138. Okay, also put that in green with it. Right, so we're done with the loan. Let's just move on. Right, and then we told the company has 3 directors who earn the same fee. 1 director was paid 2 months in advance. Okay, and if I go back to the top here, I think they did give us the director's fees. So that's the director's fee that's been provided. So the 1,824,000 is the fee, but we know now that this fee actually includes 2 months prepayment for one of the directors. All right. So now let's work that out. Okay, so director's fees. I'll start with the amount that has been given. So 1,824,000. Right, so that's been given. Okay, so I know there's 3 directors, right? So I can actually, what do I need to work out here? So I need to find out how much does each director make in director's fees per month. Okay, so I need to find the monthly amount. And this I know is the 12 months, including 2 months for one of the directors. Okay, so I need to then solve for the monthly amount per director. So then I can say monthly fee per director, and I can just say that's equal Y, right? So that is unknown at this point in time. And all right, so then I can now see, all right, so what is my fee for 12 months? Okay, so this would be essentially equal to, if you think about it, it'll be equal to the 3 directors, right? And I say times Y. Remember, Y is the monthly fee that each director gets. And then I say times 12 months. Okay, so that is the first part of my formula. Okay, and then the next part, I can now work this out here. So effectively, this will be, if you think about it, so 3 times 12, so that's 36, so 36y. Okay, so 36y. All right, so that's the first part. Now, the second part is the prepaid portion, right? So the prepayment. So the prepayment is then equal to the one director times the monthly fee that he gets, and he was prepaid for 2 months, we were told. Yeah, so one director was paid 2 months in advance. Okay, so 2 months is what I've been paid for, or what the director was paid for. All right, and simplified, so this would then just be 2y. Okay, now what is the total? So the total fee is equal to 1,824, which is essentially equal to 36y plus 2y. Right, I hope that's making sense to you guys. And then effectively, 36 plus 2y, so that then becomes 38y. Just say 38y. And then I just need to divide by 38 both sides, which then means, y equals. Okay, so we can actually do that calculation. So y would be that. Okay, let me do it like this here. So y is essentially the total fee divided by then 38. Okay, so then I'll solve for y, which is the monthly fee that each director gets, which means I can then work out the prepaid. So he was prepaid for 2 months. Prepaid amount would then be 48 times 2. Right, so 96 is what he was prepaid for. And this is then an asset that we have because we have paid him for 2 months that he hasn't yet worked as at year end. Okay, so then I go back to my balance sheet and I would say, so you can either put it as part of your debtors or separately. Prepaid fees, director's fees. Okay, then I'm going to link this down here. Okay, and I'm just going to mark this thing in yellow. I think deposits and water we were given. If I just double check this table, yeah, so that was the 11,000. Okay, so we can put it in yellow and see if there's anything in addition we need to think about. All right, so let's continue. Right, so share capital information. So this we have covered in the previous questions. So we've looked at this, and the one thing that was relevant was this final dividend that's declared for this question, which we have populated in our balance sheet, the 260. All right. Okay, so income tax. So income tax for the financial year was accurately calculated at 309,000. Income tax is calculated at 30% of the net profit. Okay, so we know what the income tax is. And remember, they've given us the provisional tax payments. They're effectively asking us to calculate the tax still owing or receivable as at year end. Okay, so then I can just do this here. I'll say N4, and this is income tax. All right, so amount given, that's the 309. All right, and just going back to the provisional payments. Okay, SARS income tax provisional payments, 359,000. So I'll just put these in minus because we've made these payments. Okay, so we've actually paid more than what we've calculated the possible tax to be. So that means we are sitting with a receivable. Tax receivable would then just be the sum of these two here, which is 50,000. Okay, so yeah, I mean, don't let the signs confuse you. The logic is effectively, we calculated income tax to be 309, but we've made provisional taxes for more. So that means the balance is what SARS owes us as at year end. All right, so then if I go back to my balance sheet here, so, tax, I would classify that as current. Usually, SARS is, quick in some instances, paying back these amounts. So we're just going to assume that is the case for Tsatsi Limited. Okay. So tax receivable. I think it's only in out of the ordinary cases where you maybe have in your previous history with SARS, you realize that they usually do delay in refunding you back the money, and that's maybe sometimes because the money is still subject to an audit, and in that case then you might want to classify it as non-current, but in a normal case it'll form part of your current assets or liabilities. Okay. So if I then come here, I can just link at 50,000. Okay, just make sure that the sign doesn't interfere there. So there we go. So 50,000 for tax. All right. Okay, so the last thing we've been given here is the financial indicator. And so this says, after taking into account all adjustments, the current ratio was correctly calculated as 1.2:1. So remember, your current ratio is effectively saying, what is my current assets to my current liabilities? So current assets divided by current liabilities, that means my current assets are higher than my current liabilities by 1.2. Okay, or 0.2, however you wish to look at this one. Okay, so then I can actually then work out what should my total current assets be because I have the ratio. So if I'm assuming that my total current liabilities are complete, okay, which is there, so that's my total current liabilities, then I can work out what my total current assets should be, okay? So you can either do this in a note, so I'll just add a note for this one. Okay, and this is to work out current assets. Okay, so in 5. All right, so we've got the current assets to current liabilities is effectively 1.2. And I can just say current assets is then, actually I can start with what I have, which is the current liabilities. Okay, so let me do that first. So current liabilities, I've worked out, so there. Okay, and then my current assets within, so if my current assets are 1.2 times higher, then that means to work it out, it's just the 1.2 times my current liabilities, okay, which is the 1.4. Okay, so then I can go back and link the total. All right, so I now have my total current assets, which means I can work out what my bank is. Okay, so then this would then just be sum of that as well as what I have here. Okay. Minus, okay. So then I'm just effectively taking my total and subtracting everything to work out the balancing figure. And that gives me 144,200 for my bank, closing bank balance. All right. So there wasn't anything else given. So that was the end of the additional information, which means we can just work backwards to find the one thing that's still remaining here, which is my total land and buildings. So remember, your balance sheet has to balance, right? That is the rule, that is in the name. So let's work out what the total should be. So then my total current liabilities plus total non-current, and then I need to add in my equity. Okay, so that gives me a total of 4.5 million. So that total needs to tie back to what I have as total current assets. Okay, so there we go. So that ties. All right, so then the one thing that is missing is then the land and buildings. Okay, so this is then equal to, if I take this total assets, and I deduct my current assets, and then I take out fixed deposits as well as fixed assets, then essentially that gives me my non-current land buildings. All right, so just to check, so those two together, 4.5. All right, so essentially, yeah, so that's that is the balance sheet question. I hope it made sense to you. So if there's anything that you need clarity on, as mentioned, I'll put my email on the description, and then you can reach out to me. All right, so we'll eventually look at the rest of the questions. And as mentioned, so the next one will be the statement of cash flow. If there's any order that you'd like me to go in, feel free to let me know. Right, happy accounting.